Crypto Hotep here with another investing video. We are on week 78 of the Family Portfolio and Dividends Tracker. Guys, I just want to say thank you. Thank you for taking the time out and always watching the videos. Really appreciate the support. If you're unfamiliar with the whole breakdown and the whole methodology behind this video, go to my channel, go to week number 1, and that'll kind of lay the blueprint out for you on the whole investment journey with my family. As I said before, I'm going to knock down some of this time that we have with the intro and kind of get into the good stuff here. So before we go to week 78, we always go back to week 77. But before we do, there's been a couple things this week with news and events. One of them being AI. AI has been an overly used term for the past year, I would say. And these couple of weeks that we've had has seen it really balloon with a lot of AI deals between like-minded companies, such as OpenAI and AMD. So on Monday, AMD inked a multi-billion-dollar deal with OpenAI that will see the chipmaker provide next-generation GPUs to OpenAI, which will have also the opportunity to purchase up to 10% of the company. NVIDIA also is pouring $100 billion into OpenAI, which is also a major customer of theirs. In addition to all this, tech giants Amazon, Google, Meta, and Microsoft continue to spend billions on their own AI data centers. And don't forget, $40 billion Oracle that is spending on NVIDIA chips to power OpenAI's Project Stargate. Okay, so it's literally almost a circle, if you will, of what's going on. And the big thing, if we could put in a kind of a resource to look at, you can see that from the data center, because I believe the data center plays a huge part. I always say whoever owns the data owns the world, basically, in this day and age that we're in. So with the AI data centers here, you can see this breakdown where it goes through things like inside the rack on the data center, manufacturing components, such as with Samsung, Intel with those chips, networking components, which are NVIDIA, chip design, which is also NVIDIA, for instance, packaging, memory, those type of things. So again, AI, people think AI is a huge bubble that's going to burst. I don't see that happening. Artificial intelligence is here to stay, and it's just getting started, really. And then in addition to that, Googl, the same Googl that I will say the haters tried to tell you that Googl was washed up and they were no good anymore, they just released Gemini, their AI solution Enterprise, which is taking an aim and shooting their shot against Microsoft and OpenAI. So Gemini, which is their artificial intelligence software that has been packaged into their handheld or their mobile devices that retail uses, they're now making it readily available for enterprise, quote-unquote, business users. So available starting at $30 per user per month, the enterprise standard and plus editions, and then $21 per user per month for Gemini business plan. The platform is meant to go toe-to-toe with Microsoft 365 Copilot, and it will enable customers to use Google's Gemini to analyze corporate data and access AI agents all in one place. That's key. So again, people said that AI was going to eat Google's search lunch and they were going to be washed up and they weren't going to be around anymore. Doubtful here. And again, AI is driving that. So with that being said, guys, week 77 saw us with a balance of $3,244.11, market gain of 15.79%, dividends earned of $23.49, and a market gain of, looks like, $338.91. So for week 78 saw us with a balance of $3,261.62, market gain of 15.64%, money weighted rate of return year to date, dividends earned of $23.49, and a market gain of $337.62. So let's go to the activity. So the activity between here and now was we did have a share of stock that we had to liquidate because M1 Finance doesn't hold that specific stock, and it was from Sony. So Sony, I guess, gifted us these shares of SFGYY, Sony Financial Group. Unfortunately, it's not on the market to do anything, to sell, to buy more, anything like that. So we were just forced to liquidate that. And we did have one buy. We bought Moody's with that amount that we had in the SFGYY. Also, this was a good week because we did have our regular $15 deposit here. And we placed 5 buys. We bought some McDonald's, Pepsi, Starbucks, Google, and Costco here. Okay. And then one thing we are going to look at, we'll look at our dividend income currently. So our dividends earned right here are $24.84. Estimated income that we have yet to earn that we will is $9.02. So total income currently is $33.86. Okay, so not too bad. And again, you can obviously hover over here and see where those dividends are. Okay, you can see upcoming dividends, the ex-dividend date, the pay date, the number of shares that you have, and the dividend per share. And then you can also see your holdings in the yield on cost, and the average cost as well here, which is nice. And then for the next 12 months, it'll project out how much dividends that you are expecting as well. So as always, guys, we'll go bottom to top with our portfolio. Bottom is our middle. Our middle has a balance of $395.02, money weighted rate of return of 6.45%, dividends earned of $2.62 here. So Target, again, the Achilles heel here, and then Starbucks also the Achilles heel as well, down 12.91% on Starbucks and down 27.84% on Target as well. Again, we're not doing anything yet to adjust those items. I'm going to take a whole year just to go back and see what's going on and see how the year shapes up before I do anything with our middle and those two. Okay, let's look at our youngest. Our youngest has a balance of $451.40. Money weighted, rate of return year to date, 17.60%. That's great. Dividends earned of $1.56. Market gain $50.32. So Tesla's been driving this fully. It's regained its footing, right? So now we are above 30% on Tesla year to date. Apple, now we are above 14% on Apple. Sony up over 42%. Costco up over 4%. And Starbucks, very similar to our middle, down double digits on Starbucks. Again, we will hold tight to that. Okay. Let's go to my wife's. And my wife has regained the third spot here again. So my wife's balance is $462.75. Money weighted, rate of return year to date 59.50. Dividends earned of $2.42, and that market gain is $128.08. Whew, man, that is a rate of return. And everything is in the green for my wife. Really nothing to say here. Celsius took a breather last week, and now it's back again. Celsius, I believe, is cracked over $60 again per share. You can see what she's up over 150% year to date on Celsius alone. Pepsi up over $6.29 on Pepsi. Googl up over 50% on Googl, and then Tesla gaining the footing again, up over 45% on Tesla. My wife's stocks, it's a great story to tell because my wife was down below, I would say, in that last spot for so many months because Celsius was bringing it down. Celsius was the Achilles heel at one point, but now everything is turned around. We continuously put money into the markets, continuously trusted the companies that we invested in, and now we are receiving the fruits of those labor right there. Let's go to our Otis. Our Otis has money weighted rate of return of 7.48%. With a balance of $971.21. Dividends earned $4.72. Love to see it. Market gain of $54.10. And all in the green. Love to see that. So Apple up over 8%. Tesla up over 16%. Costco up over 1%, not that much, and then McDonald's up over 2.25%. It's very good. This is a good turnaround here too, because our oldest, their stocks were in the red for so long this year, and it did take some time for kind of the train to get moving here. But again, it's just, it's funny because the stocks that we invest in, these are good companies. And I think what happens with new investors is they invest money. I think two things happen. They invest money that maybe they shouldn't be investing in. That's the first thing. And then the second thing is if they invest that money, maybe they don't invest it at the right time, and then the stock goes down. And then you see the red for months and months and months. A lot of times newbie investors will stop investing at that point, and then they'll just stay in the red. The key thing is if you can maintain the cruise control of adding to those companies that you felt so strongly about and continue with the journey, you're going to do a couple things. And one of the things is you're going to average down your cost basis for those stocks, meaning that if you bought stock A at 70 and then it crashed down to 60, now you have the opportunity to buy that stock cheaper and lower your average cost per share. Thus, if the stock then goes back up and reverses, now you have better gain percentage as well. So I think it's all perspective in that regard, and I think that needs to get spoken about, because the psychology aspect of investing also doesn't get talked about, and that's a huge part of it. Last but not least, I'll get off my soapbox here. Last but not least is my stocks year to date 13.9%. Money weighted rate of return of $981.65. Dividends earned of $12.17. Market gain of $90.48. So with me, we had industrial energy has been down over 1%. I'm not too worried about that. That's Waste Management and Cintas. Just kind of shaking out here. Again, if you're not familiar, I did consolidate my stocks. I want to say it's been a month and a half, maybe 2 months ago. I consolidated my stocks from 50 near holdings to now only 12 stocks. So that's why you kind of see the disparity in some of these percentages here. So consumer staples, we have Costco and Lowe's. They are down again, and that's primarily because of this. You can see this big drop down. This was in July, at the end of the July there. So that's why is that consolidation. And then restaurants and food is also down, which makes sense. Coca-Cola and Domino's Pizza. Domino's Pizza was actually in the news because I guess they have some rebranding going on as well, which is kind of cool. So very cool with Domino's Pizza. Despite the little red on my portfolio, I'm all good right now with my stocks. My stocks have been doing excellent. I like seeing double-digit dividend earnings with my stocks. So nothing too much to say on that. And we'll cut this video short. We're going to stop with less than 15 minutes. So for week 78, guys, the balance is $3,261.62. Money weighted rate of return year to date of 15.64%. Dividends earned of $23.49 with a market gain of $337.62. If this video was helpful for you with your investment journey, or maybe you want me to cover something else within the family portfolio or with stocks in general, comment below, share the video, subscribe if you're not. It helps out the algorithm, supports the channel, and supports me, guys. But as always, thank you and happy investing, guys.